Ever wonder what a professional trader's plan looks like before the market opens? In this video, we go inside a live trading session with Christian to see how he uses a disciplined, rule-based strategy to navigate the market's volatility. He shares his pre-market analysis, his entry and exit logic, and the mindset that keeps him consistent.
That can help you create a certain outcome that you want, okay?
This isn't about guaranteeing success. It's about seeing a repeatable process in action.
Hey, good morning.
Hey, Daily.
Really look forward to your stuff each and every week. You know, look, I love everybody on the network, and I talk about this all the time with you. I just think that there's really something that you do that is very clean. I love your prep. I think people come in, they really relate to you, they could see it. And then when you go in, it's like you execute the plan almost just the way you drew it up. I mean, it's pretty interesting to me to see someone be able to do that, because a lot of what we see with a lot of other people, there's a lot of scenarios or things that happen right in the moment. And I get everybody's got different styles. What I love about what you're doing, above all, is that the preparation leads to that execution exactly. It's very clear to us and the users. You know, I just always want to give you kudos for that. And you've been doing really well, man. You've been making money with us. You've been really killing it. So yeah, great to have you here. And let's take a look at what you got in the charts. I want to get right into it with you, get you to start prepping everybody for the open.
I'll go over this trade really quickly since I'm already long. I'll go over my entry later in a bit, but I did take partials into 1.5R. I took more off at 2.5R. You know, I was wanting to see if we would be able to hold and potentially set up a continuation higher. It does not looking like that, so I wanted to leave a runner on. So we'll see if we can sort of create some sort of contraction here, and then maybe we do get higher, but that's just a waiting game for now. Let me go into the trade plan here. So as we all know, we've been in this I think 10 days or 11 days now in this range. Here's a 4-hour. In ES, it's pretty evident this range is 62.55, 60 to 63.18. It's an uptrend, so I'm focusing on buying pullbacks into support, and that's been playing out really well. We just recently hit that 63.18 number. So I think, you know, what a lot of viewers here will agree with me here is that until we can form acceptance of resistance, we can assume that it's going to be rejected back down. The same for support. If we can hold support and form acceptance, then we have to assume that it's going to go back up. So we're in a mean reversion market until we can do something like this or something like this for ES. On a breakout higher, we can see 63.70s. For NQ, it has been stronger. We have semis leadership, software's bouncing back, just a lot of growth areas in tech that are just killing it. So now at this point where price is, we have to sort of consider, is it now time for it to form acceptance? Meaning the 70-80 area, which was sort of prior highs in this range, you can see that the price attempted to hold on this initial breakout, hold back into it, tried to bounce and created a doji hammer candle, and then it rejected back down. So that was failure. That was a failed breakout that we experienced on Tuesday. We came aggressively into support yesterday, bounced back up. Can we now hold it? We did held it this morning, which is what got me long. But can we form some sort of acceptance here and then break out higher? Maybe because it has been a choppy market, we just take out these highs and come back down. Or can we form acceptance there and see higher? Similar for below, if we come back down, can we hold at 970s, bounce, or see a move lower, right? So it's typically zone to zone. If it can hold, great. If not, let's look for a move back down. So that's sort of the larger time frame view. And then the hourly, as always, is my trade plan. Here's this boxed range that we are in. We are testing support here, which has been the sort of area. And now we want to see, okay, is it able to hold? Can we consolidate up here? I mean, I drew this scenario before we got the bounce. So my main scenario number one was, can we hold any pullback into the 90s London low area? If so, that can take us up to 63.18 and inject. We're seeing exactly that right now. If we're able to bounce a little bit here and form acceptance, then we can get a push up into prior week highs, 63.43. Of course, reject from there or hold and get to that 63.70s area that I shared earlier. If 90s hold, I mean, I think everybody has been discussing this 90, 92, 93 area. incredible bull bear zone. So if it's able to hold on a deeper pullback again, we repeat that cycle, bounce back up and see if we can push up higher until we form acceptance of 90, 93. Then we have more of a confirmation from sellers that they're stepping down from these higher areas to this lower area and they want to drive price lower. So until we get that, we have to assume we're going to bounce back up. And then obviously back down to support to these levels if we fail there. For NQ, we are, again, stronger. So instead of being back into that bull bear zone like ES into 90, 93, which is 970s here for NQ, it's actually holding this 080s, which was resistance, 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 try to hold support, failed, resistance. Hey, look at that. We held, right? We have found support. So that's a change of character. Can we continue with that? Maybe create a higher low here, form acceptance, and then break out higher. So it's a step-by-step process that we want price to guide us in, to give us a little bit more data, because we're data analysts at the end of the day. We analyze the data that's in front of us to make decisions. So the data is telling us that NQ is really strong. We're holding the most immediate support area. Can we hold up here, form scenario 1.2, and then break out higher to new highs above this 222 high and maybe into 270s. If it fails, then we can get our pullback into that 90s, 70s bull bear zone. Look for a bounce opportunity there until we form acceptance and know that sellers are moving down and are ready to take price lower into prior day low 280s. It's a range bound market. So I like to focus on a zone to zone level and see how each day goes.
Yep. Clean and concise as usual.
So I'll go over my trade as the market opens here in 2 minutes and we wait. I thought we were going to hold up here. It doesn't look like it. So NQ had this volatile consolidation here, but we were back testing that 980 zone, right? So you have to remember that's support. So think of this as support here. So we were back testing that. And you guys know I follow trend structure a lot. So we had our lower low, lower high, attempt to a new lower low, reversal back up. Now, into this reversal, we had a strong rejection. So I think hopefully by now some of you guys know that on a new rejection and a breakdown attempt, because that's what this was. Let me delete this because it looks like I'm going to get stopped out and don't need this anymore. In a strong rejection like that, that's looking to make new lows, what you need to see is you need to see price come in, bounce to create a lower high, and then break lower. I mean, I by now, you guys should think I'm repeating myself because I am. Because what I do and what anybody else does on here, it's very repeatable. Consistency in the market is a repeatable application of the parameters that allow you to have a positive expectancy, right? On a new breakdown attempt, we are to bounce to create a lower high and reject. When we fail to do that, I got long on that reversal, right? AKA the 9 lower high entry, which was right here. And my stop went right here. So you can see how my entry was exactly there because I was looking at the 5 minute here to look for an entry at the break of that last 9 MA lower high, right? I want to enter into that reversal because when we take out the last lower high, what takes place? We start a new higher high, right? I mean, this is trend following 101, right? We take out the last lower high and we start a new higher high, higher low sequence. So it is in the birth of that new trend sequence that I am looking to get long in, okay? Let's give it some time. Let's see what the market does here because it did go a little bit through a strong rejection and ES is leading. So we want to see if we can hold. All right. So as you guys know, I'm simply waiting to see what structure we form here where ES is holding the 6305. Now remember this sort of 15 to 18 area, strong resistance for ES. So we need acceptance up here to push up higher. ES is taking leadership. Let's see what's strong today. Industrials are strong. Oh, would you look at that? Financials are strong. So that's why you see that leadership in ES at the moment. But NQ needs to bounce to really help ES really get that drive higher. All right, so let's see what we can get here. ES is incredibly better than NQ at the moment. NQ is not even budging at the moment. What's bringing it down so much? Or why is it not really moving? Semis are red. Software green, so software has some leadership. Palantir resting, crowd lower, okay. MSTR consolidating. So Bitcoin's consolidating as well. So it's just a wait and see at the moment, right? We need structure. There's no structure at the moment, and we need that structure. Do have some divergences. Is it worth looking for a long back here again? I might consider one here. I'm going to take a 9 MA reversal again because ES is leading and NQ is attempting to bounce. So I want to see if we can get that reversal back up. Now my entry was here. My stop. Oh, that's not what I want. All right, so I'm going to look to take half off at 1.5R if we can get up there. Oh, no. So you can see how we moved back down into support. We had a lower low, lower high, second lower low. We bounced into the 9MA again and attempted lower, right? We created a higher low and are seeing a bounce now. So the trend was done, right? That was a trend completion. Into that second lower low, we had what? We had almost equal lows in RSI. It did made a new lower low, but I don't want to call that a straight out divergence because it's not. But when you have a flat sort of equal low structure in RSI and a very steep lower low in price, that's still an indication of a divergence. And if you look at ES, you had a second lower low here, and RSI actually had a little bit of a higher low. Let's call it equal low, but that was a divergence in ES as well. In NQ, we came back to what? Support, right? So because we're still at support, we need acceptance to look for a breakdown, okay? Did we get that and did we break down? No. So I got back long again because we had divergences into support, and now I'm looking to participate in the trend. So let's see if we can get 1.5R taken off. Come on, take me out. Take us out. Take us out. I want to partial out here as well. Let me see if I can get out at 1 point. We might be range bound in NQ, so it might make sense to take some out. Okay, I got out some at 1R. I'm going to leave the rest up here for these targets to see if we can hit that. But look, so far, I mean, it's the same structure here. On the 2 minute, it was a lower low, lower high, second lower low. You can see that we bounced into the 9MA to create a lower high. From that rejection, we attempted to create a new lower low. We created a higher low instead and then reclaimed that last lower high. So it is resistance. You can see that we failed to hold above it earlier and we moved back down. So now the second time around, what we need to see to confirm that we're able to hold it, we need to see some consolidation here to show that sellers aren't showing up, and then we can break out higher. So until we can do that, it's still resistance. We need acceptance. This is a really good, it's a little bit complex, but it's a really good structure to understand. For those in the group who are watching, I think by now I should know what this structure is. We had a breakdown here of this consolidation. In that breakdown, we had a lower low, lower high, attempt to a second lower low, fail, and trigger a reversal, right? So that was sign one that support was holding this 80, 70 area, right? Which is probably something like this. So that was your first sign that it was holding. Now, what happened here, and at the same time, this created a wedge structure. So it broke out and came back in. This was a breakdown attempt, meaning a breakdown attempt now needs to go a lower low, bounce into the 90MA, and push lower for a new lower low, okay? Price needs to do that. Why? Because that's the market structure. That's trend sequence, right? When we fail to continue lower and reclaim the last lower high, what do we trigger? We trigger an internal reversal that now creates a sequence of higher highs, higher lows, higher highs, okay? When that happens, and as you're looking at other things, you have maybe divergences, maybe a delta divergence, maybe there's something else that you're looking at, right? Maybe you're looking at volume profile, etc. When that happens, and let me go into the 2 minutes to see what structure I can find. So you can see here a little bit better that had on this internal structure, lower low, lower high, lower low. Into the second lower low, and we reject on a bounce and then move lower, right? We failed to do that. What did we do instead? We took out this last lower high and we started a new 90MA uptrend. Higher high, higher low, higher high, right? So that was my initial entry long because it's just a factual statement that on a breakdown attempt, price needs to create a lower high on a bounce and then break lower. If it fails to do that, then we're triggering a reversal because again, we're still at support. And my entry rules are on a 9MA reversal. We triggered push back up. What we want to see here is a wedge structure to build up, confirm that we're able to hold what? Zone, but also these prior swing highs, right? That means this can act as resistance. It can now be support. Can we wedge up and set up for a continuation higher? So if we can do that, perfect. We have to wait and see though, okay? Then what happened in NQ here, I already went over that structure. You can rewind and look back. But it happened again. We had our divergences and I got back long where at the 9MA lower high reclaim right here. So now there's really not much for me to do because since I'm a trend follower, I'm looking for a possible new uptrend to emerge. And if there's power behind this, we should push up to new highs, no problem. Remember, we have that swing high at 222, which is right here. So that is our last swing high. Can we push up there? Maybe. So I'm looking for a move up there, but I'll take partials along the way because I want to pay myself. But in a way, I already did pay myself. I did take half off at 1R. My risk is paid for. I can just let this trade figure itself out, right? Like some in college. If we reject from here again, then so be it. There's really not much for me to do because everything says higher, right? We have a daily uptrend. We're bidding consolidating. We have a 4-hour structure says higher. The hourly held what? The hourly held at the 80s zone. That says higher. So all these time frames are saying higher. So what am I going to be doing myself counter trading that, looking for like a 20-point move when over time, if I can align myself with the higher time frame, I can come to risk. What is this? This is a 94 entry and a 64 stop, 30 points to make what? 100, 200 points. I've captured more points in trade ideas like these. So now we have to wait to see if we form acceptance. Can we hold a potential pullback, create a wedge here, and set up a push higher? So that's what I'm looking for here in NQ. Similar with ES, and we'll have to wait and see what we get. But I mean, it's a great morning already. 2 back-to-back winning trades. What more, right? Good question here from GBOG. Do your targets dynamically move when you move your stop below the low? My targets are fixed, meaning that the spread between my entry and my stop measures out the standard deviations of where I'm looking to take partials. I'll have resistance zones as targets, but I still want to manage my position by taking partials at areas that I know over time can help me lock in more points for what I'm risking. So I got to manage that. Because sometimes, the targets that you have don't hit, and I don't want to sit through that. My setups occur 2 to 3, sometimes 4 times a day. So I don't really need to wait and hold, right? I can take a trade in the morning, partial out. If it runs all day, perfect. If not, maybe I'll look for another trade, partial out. So over time, I'm just stacking up these partials, right? And to me, that's a better emotional and mental I'm stacking up these partials and building my foundation. I like to go heavy when I find an A+ opportunity. So I build up that foundation and I attack. Oh, ATM strategy, fixed number of ticks. What if you enter and your defined stop is not under the recent low? I see what you're saying. Yes, I will. We'll see. When that happens, I probably need to increase my size, right? Because if I'm risking a certain dollar number per trade, and I would say that number is roughly 30 points. That's why the fixed entry and stop of the ATM is at 30 points. If it's at 20 points, for example, or even 15 points, I need to double my size so my dollar amount that I'm risking remains the same. Does that make more sense? So I'll adjust the size, but my exits will remain the same. Any reason why I won't move my stop? Yes, because this can fail right now, and I'm okay with that. I'll move my stop typically when we get into the 3 to 4R range. Only because at that point, we've seen a pretty big enough move that I know my entry can be protected. And at the moment, we can fail and come back down, right? And since I'm a trend follower, I'm looking for trends to manifest through time. So I have to give price the opportunity to figure itself out and go through some sort of back and forth to then have the move that could happen, right? If I don't do that and I move my stop up somewhere, I can get stopped out. And then later in the day, I'll see price into my targets. And that happened in the past, and I'm sure that happens to some of you. My way of fixing that was keeping my stop where it is because look, my long is not invalidated, right? What do? We came back into support and we bounced. It is only when we fail at support that I know that my entry is no longer valid and the trend in this direction is no longer happening. But I don't know that at the moment. Because why? Because we didn't have acceptance here and then break lower, right? So I have no confirmation to act on that price is telling me we want to go lower. I want to give price the gift or for it to figure itself out and then continue higher. Until that happens, I'm okay leaving my stop where it is. But if we do push up enough to enough higher point, I will move my stop. Like if I get taken out here at 3R, I will move my stop to break even on the rest. Show more of my ES chart. There's really not much happening. NQ's leading. So what we might be getting here in ES is that consolidation acceptance, and it could be a box. But as long as this 16, 15 area holds, we can do something like this and then break out higher. So at the moment, it's really not doing much. I'll do this. I would love to see another high in NQ, but maybe it doesn't give it to us. System creation is identifying the parameters that can help you create a certain outcome that you want. Okay, so that's the entry, that's the stop, that's position sizing, That's trend filter. What do I mean by trend filter? It's something on the chart that can help you understand when we're in a bullish structure or when we're in a bearish structure. For example, I think we can all agree that when the market as a whole is above the 200 daily moving average, we're in a bull market, right? And when we're below it, we're in a bear market, right? But that's something on the chart that tells you bullish, bearish. So you need something like that on the charts to help influence your trades, how you frame your trades. Why? Because if price is the most factual thing on the chart. If it is telling you that we are above support, why am I shorting? Can shorts work? Absolutely. My opinion is that shorting against the trend means you're risking 1 to make 2. If I'm going with the trend, I'm risking 1 to make 5, right? As a business, I want to be in a position where I can make certain times more than my costs, right? And this is a business after all. That's why your parameters of your system need to be defined and then applied to understand what the positive expectancy of your rules are. You short the market because markets mean revert more than they trend. Simple stats are higher on mean reverting. Again, cool. If you're making on that, I can't tell you anything. Who am I to tell you to do something opposite if you're making money? And one of the hardest things we can do in the world, I am nobody to tell you that. I'm just sharing my experiences, my system. I'm really good at buying support when we're in an uptrend, and I'm really good at selling resistance when we're in a downtrend. Another layer to this is when you scale. A lot of traders don't have that experience where they're scaling from a $5,000 to $10,000 account. I agree. Look, if you're really good at that and you can scale efficiently, great. I'm not good at scaling in mean reversion counter trend trades because, I've traded big size and the emotional and mental sort of bank deposits, right? If I were to call that need to be in place in order for me to execute efficiently and effectively. I need to align with the trend. I've traded 100 lots before and I need to be with the trend. I can't be in a mean reversion strategy.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.